If you want to boost your personal credit score this year, here is the fundamental law of success that you really need to have this year, especially with the economy going in a very uncertain way. Also, lenders actually tightening their capital requirements for uh, for personal credit, whether it is loans or credit lines. You might need to actually be in a specific sort of position to actually qualify real fast. Okay, so if you're looking for personal credit, if you're looking to boost your personal credit score this year, you have to really understand that a personal credit score goes through the basics of credit, but also importantly, all the type of loan that you're getting. Okay, so whether it is secured loans or unsecured loans, or even that's a good thing, or even something in between. You have a lot of platform nowadays, a lot of platforms nowadays giving you a loan or a line of credit depending on your specific profile. Okay, when it comes to secured loans, you need to understand that the law of success for personal credit really depends on how much you are borrowing. Remember that a secured loan is a loan that is secured by some form of collateral, and this collateral can be a house, it can be a car, it can be a savings, it can be a savings account, or it can be money in a retirement account. And when it comes to personal credit, if you are trying to optimize your strategy these days, ask yourself, when do you need to really borrow a secure loan or unsecured loan? Normally, secure loans actually call for a smaller percentage. So APR wise, you're probably paying less APR if you collateralize the loan versus non-collateralize it. So that's for secure loans. For unsecured loans, you have no there is no need to post collateral, but just make sure that the APR might be high depending on the specific credit profile, like credit score that you have. One thing I want to say here is that whether you are going for secure loans or unsecured loans, the information will be the same. The impact will be the same on your credit score. In other words, the lender will report your data to to the three credit bureaus every single month. So that's TransUnion, Equifax, and Experian. If you think about the law of success for personal credit, besides the type of loan that you get, or besides the, let's say the type of a credit product that you get in general, you have to understand that interest plays an important role. Interest, I think I've said this to you before. If you go if you go to a bank or a credit union and ask for a secure loan, they will probably charge you like 5%, 6%, or 7%. But if you were to really ask for an unsecured personal loan, you're gonna have to pay big time. Now, in terms of interest, just think about interest as the price you pay to borrow money, in addition to any upfront fees. You might have closing fees and what have you. And so, one thing I want you to really understand is that a lot of banks and credit unions, they actually associate their APR to something called a prime rate. So, for instance, they'll tell you 6 points. I mean, 66% plus prime rate, or prime plus 12%. It really depends. Okay, so the prime rate is actually the interest rate credit lenders charge to borrowers with excellent credit, and it's actually the best possible interest rate on the market. So if you're looking for boosting your personal credit, this is not just for accessing more products, but it's also for having a low APR. Okay, so if you're going for the prime rate, that's really an important element to think about. By the way, when it comes to interest rates, you might have fixed interest rates, or you might have variable interest rates. Some lenders will like either or. It really depends on what you're trying to achieve, okay? So a variable rate is a rate that's automatically adjusted up or down, usually monthly or quarterly, based on current interest rates on the market. And a fixed rate does not automatically vary based on market conditions. However, the term fixed rate doesn't mean it's fixed forever. It can still change with notice from the lender or under certain conditions. So just be aware of that. Now, let me give you an example here of a scenario where your interest rate might go up if you have late payments. So late payments on a credit card may result in an increase in the interest rates. Promotional interest rates on credit cards may have expiration dates, or even in some cases, they may be contingent upon certain criteria. So it's really crucial that you read the fine print on any loan, credit card, or other credit arrangements you may actually make, no matter how tiny the tab is. Just remember that it's all about the cost of the loan you're getting, or the credit card you're qualifying for, right? The APR is actually the cost. So just make sure that you do all your research beforehand. When it comes to the law of success for personal credit, remember that credit bureaus and credit scores play an important role in terms of how lenders perceive you, what kind of risk they associate with your application. Okay, and the credit bureaus, the cool thing is you got to have a way to interact with credit bureaus satisfactorily. In other words, you got to have a system in place where if you're able to monitor your credit scores or your credit reports, and if there is a problem, you have a way to really reach out to them automatically. You don't have to really outsource the task to a third party. And no, okay. Now, so the thing is that lenders usually assess your application through your credit score, through your credit profile, let's just say info in your credit reports in general. So it's important to understand that you want to have the right data. You want lenders to look at the right data whenever you apply for a loan or line of credit. Okay, so that's really important. When you think about what kind of credit transactions you see on a credit report, you have medical bills, credit card and loan bills, student loans, bankruptcies, and what have you. So that's kind of cool because it gives you a lot of possibilities, especially when it comes to increasing your FICO score. Speaking of FICO score, we are speaking about the credit score, okay, which is really the most commonly known when it comes to credit scores. And here you have let's say a range that goes from 300 all the way to 850. So one thing I want you to really understand is that you want to really focus on achieving 670 or more. That's going to put you in a very good category when it comes to credit score. Usually, you're looking at good credit scores because if you have anything below 670, you are going to be considered fair credit. If it goes from 580 to 679, and it will be bad credit if your credit score is actually below 579. So if you are trying to improve your personal credit score, make sure you pay bills on time. Make sure the credit utilization actually is normally kept below, like you keep it below 30%. That way you can increase your score. Just make sure that you use the same account for a while. So you're looking at having an average account age that's actually extended. Be very careful about the credit types that you get. And finally, you want to really apply parsimoniously to credit. In other words, don't have too many credit applications because those credit applications actually might reduce your credit score. So if you're looking for the law of success for personal credit, you want to have a high credit score. That's all. That's already understood, right? You want to really understand. You want to make sure you have a high credit score. But the question is, how high? Usually people say, well, 670. I think I said this before. 670 is actually considered a good credit score. But you can really also think about going a little higher. Like you can target having a credit score of 700. Okay, 700. And so the higher your score, the more likely a lender will not only extend credit to you, but also give you the credit with the most advantageous terms. Okay, that way you have a clear idea how much you're paying, and most importantly, you can access credit in a fashion that's as cheap as possible. So if you've got let's say an excellent credit, which is really what it means to have a 700 credit score or better, what happens here is that banks are competing for you as a customer, and they will offer you their best interest rates. And so it's not rare to see the banks may offer you single digit APRs, not only for loans but also for credit cards. So that's really good because again, you are going to save money big time. And so a difference of 100 points, for instance, on your credit score can mean a difference of hundreds of dollars a month on your mortgage payments and potentially tens of thousands of dollars over the course of a mortgage. Okay. So the difference is smaller but still significant, even on a car loan. So a higher credit score is not just about being approved or not for a specific loan, it really saves you money over time. And it's not just the personal loans, even renters can save money with better credit. So when applying for an apartment or a rental home, great credit can mean a lower deposit, and utilities often charge deposits for customers with subprime credits as well. So that's kind of cool. I mean, the list goes on and on and on in terms of saving money, not only in this economy but also over time. So that's kind of cool. So the thing is, when you look for the law of success for personal credit, you have to remember something called credit invisibility. In other words, if you have good credit or no credit, if you have a bad credit or no credit, you might be in a situation where you are invisible credit wise. Okay. So one big problem for many people is actually credit invisibility. So to have a credit score, you must have a credit history. So you build credit by having and using credits. So for recent immigrants, younger people, or people who have just started their business, I mean, the credit profile or the business credit profile. In other words, they just haven't had a chance to build credit before. Credit invisibility or the inability to start borrowing because of a lack of credit history is actually a major concern. Okay. So what I'm telling you here may affect 45 to 50 million people in this country. So credit not only impacts your ability to finance a home or car, it can impact your ability to rent an apartment, get utilities turned on, get a cell phone, or many other things, especially if you are trying to streamline the process for let's say for you or your family. Okay. So there are a lot of ways to actually start building a foundation when it comes to having credit in the first place. You can become a co-signer or authorized user on someone else's credit accounts. You can open a secured credit card account, or you can open a stored credit account. And finally, you can actually make sure that you are boosting credit as soon as possible and as often as possible. So let me talk to you about becoming a co-signer or let's say an authorized user on someone else's credit accounts. So if you have a family member or close friends with good credit and they're willing to add you as an authorized user on their account, then you can begin building credit, okay, based on their cards. So it's important to make sure the account owner is responsible for is responsible actually with their owner's card. Okay, you do not want to really damage your situation even further by partnering with quote unquote the wrong individual. So what happens here is that so you can really increase credit real sorry you can increase your credit real fast. Okay, so that's really good from a flexibility point of view. So when it comes to credit, there is a possibility for you to rebuild credit, and that's important when it comes to the law of success for personal credit because sometimes stuff happen, right? In this economy during COVID, for instance, a lot of folks all of a sudden didn't have enough money to pay their bills, so the credit score went down big time. So if you are in a situation where you feel like you need to rebuild credit, then you have a few things to do because once you get to that level, you might really spend more money, more time, more resources to fix things and bring them back up to the level where you want them to be at. Okay. So that's why you want to be proactive. Be proactive so that you can build or rebuild credit history. First of all, you want to check your credit reports all the time because that's actually the foundation for everything credit related, right? So if there's a mistake, you have an opportunity to catch it before it extends, and that's what you want. You want to catch it before it extends, so that whenever whatever info is inaccurate, you are able to make sure that you do not have it in your credit files. and you can really access your credit information, let's say for free once a year. But if you want it more often, you have to sign up with a third party data provider, and you have the data. I mean, for free, by the way, and you can get it as often as possible. You want to pay down debt, okay? Paying down debt also can help you rebuild credit. If your credit went down because you had too much debt, think about paying down debt, and you can also think about credit counseling, a debt management plan, or debt consolidation. So you have a lot of ways to actually pay down debt. And so when it comes to rebuilding credit, you might have 1 to 5 years to get things done, especially if the damage hasn't been too much in the first place. Okay, there is no set formula to calculate how quickly you can improve your credit score, and there are many variables that make even an estimate difficult. So for late and missing payments, judgments, and collections activity, you're looking at 7 years, 7 to 9 years. For bankruptcy, you are looking at 7 to 10 years. So you can see that it's a lot of years. Okay, don't let this discourage you. Okay, since your credit score is weighted toward your most recent history, focus on improve. You want to improve your credit usage so that you can automatically achieve good results in a reasonable time frame. You don't have to wait for 7 years. You don't have to wait for 10 years to get results. So one thing I want you to really understand here is that when it comes to the law of success for personal credit, you have to understand the timing of credit usage. When should you use credit in the first place? Because there are situations when you want to use credit, and there are situations when you want to really, really, really avoid using credit. That way, you can save money big time. So you can use credit cards, you can use loans. First of all, you can use credit cards for a specific set of situations, and you can use loans and lines of credit for also another type of scenarios, if you will. When it comes to credit cards, you are able to use you're able to use plastic for everyday purchases. So that's kind of cool. For debt consolidation, for online purchases, for major projects, for travel. Okay, so you're able to get things done faster for travel or for cash advances. So you have flexibility baked in right away. When I really talk about cash advances, you have to understand that many credit cards offer a cash advance option. However, you want to read your terms and conditions carefully before even thinking about using a cash advance, because cash advances often carry a higher interest rate than other types of credit card transactions. So if you need cash for a project or unauthorized expenses, just think about getting a personal loan. Personal loan will be the less costly option for you this year, especially if you are trying to get things done faster. But building credit overall can be intimidating, and rebuilding it can be even harsher. Still, with reliable, straightforward info, you are able to make things happen. Okay, so just remember that you're never far from your best the best scenario when it comes to credit score building. So, in conclusion, today's conversation, I spoke to you about the law of success for personal credit. So, I give you the credit basics, how interest works, credit bureaus and credit scores, establishing credit and credit invisibility, rebuilding credit, and also maintaining a 700 credit score or better. Thank you so much. God bless you. I'll see you next time. Until then, until remember, stay marvelous.